This is the weekly review for the week of November 14th to November 18th, as well as this week's Sunday preparation. So, coming into this week, I didn't really have the clearest bias because we were dipping into this daily fair value gap in premium of the weekly range, and we also had price on the daily chart respecting bullish PD arrays from this daily order block, this daily order block. Um, so I didn't know if price just wanted to end up pushing higher or we were going to retrace into this daily fair value gap and order block. So I was pretty much just waiting for price action on Monday to give some type of clues into what it wanted to do for the rest of the week. So Monday started off as a little bit of a tricky day for me. Um, I was just watching price to see what it wanted to do, and we initially came down here and took London low with a SMT and displaced up. Now, we did form the YouTube model on the 1 minute, um, but there was nothing on the 5 minute. So I just noted the 1 minute for journaling purposes, but I don't really execute on the 1 minute. And after that, we took London high and had this short term SMT. And I was basically watching this M15 fair value gap here from the bullish setup. So this one right here. And that was in discount, I believe. Yeah. Um, and I was initially looking to long here, but when price started consolidating and then we broke um, below the fair value gap low here, I decided not to take it. Um, or I should say, when price started consolidating and we formed this SMT, that's when I decided not to take it. And then I saw this big displacement candle down that took out the low end of that fair value gap, and I saw that at the same time we created a bearish setup here on the M5. With this M5 fair value gap, and that's where I went short here. Now, when I reviewed this day after the PM session closed, I noted that this trade would not have been a high probability trade because we were stuck between two raids, a bearish raid and a bullish raid. And even though there was no real clear PD arrays here for price to return uh, to have a bullish reaction off of, just the fact that it was a Monday and we were just stuck between these two liquidity pools um, would make this short here at this M5 fair value gap. Um, this one here that I have noted as a multiple time frame inefficiency because there was a fair value gap from the M5 all the way down to the M1. But regardless, this wouldn't have been a high probability trade due to those conditions. So after I took that loss, I was watching price and I saw this displacement candle up. And during the lunch session, um, we returned back into this fair value gap. So we're respecting bullish PD arrays here. And we also had this failure swing with the 930 low. So US 30 took it where S&P did not. So that's bullish. And we respected this fair value gap and we started pushing up higher, taking out these uh, relative equal highs up here. And right here at the beginning of the PM session at 1 p.m., I saw that price was retracing into this fair value gap here. So I ended up setting a limit right at 1 p.m. at the mean threshold of this dealing range, and my draw on liquidity was previous week's high. Given all of this lower time frame bullish evidence, that's why I had previous week's high as my draw on liquidity, but we swerved that entry and never made it down to discount, and then we ran up and took previous week's high. So I was then looking for potential displacement off of it for a short setup. And on the M5, there was nothing, but on the M3, I did note a small fair value gap, but this wasn't enough evidence for me to go short, to be honest. So I just noted that for journaling purposes, but I would never have the confidence to take this setup live. So back onto the M5 chart. Right when this candle printed was when I got interested in price, because I saw we respected now this M5 order block here, bearish order block, came up and then immediately had displacement breaking market structure. So, and then we also broke this market structure here, the last swing low prior to the raid of previous week's high. So right here, I got interested in shorts. So I just waited for the fair value gap to form, and I set a limit here at the mean threshold per usual. And my draw on liquidity was this low resistance liquidity run below the intraday lows, the 930 low, because I was anticipating Monday was going to be a consolidation profile, and we took buy side. So the only other liquidity for the day is sell side, and that would be resting below here, which we eventually got to, but we never made it up into a premium to get an entry in this fair value gap. But nonetheless, it was a pretty clean day on Monday, even though there were no entries given for this long here and this short here. And then also to note, we had a SMT with the previous week's high raid. So moving on to Tuesday, Tuesday there really was nothing. We kind of crept up during London, and then we had this high impact news that ended up raiding previous day's high, and then we just had this kind of consolidation, price inching down, so there was nothing to take here. I didn't really even look at the charts at this point once I saw this type of price action. And then I got interested again once I saw this displacement going down, and we ended up taking previous day's low with the SMT. So I was waiting again on the M5 for a fair value gap to form, and nothing formed on the M5. There was only a setup on the M3 here. Wasn't really the cleanest setup, but I just noted it for my journal. Where we had this one candle make both the swing low and the swing high for the dealing range, and we just dipped down into discount and went up and took that 1.3 R. And the logic that I was using to go long on this trade was the fact that there was a low resistance liquidity run, that fair value gap above price up in here, this M15 fair value gap. So after price took previous day low, we're likely to retrace up here and rebalance this inefficiency down. So that's why I was looking for a long setup here. Beyond this premium end of the fair value gap, I didn't know what price wanted to do, but that's why I was just looking for that short-term setup after the raid. So moving on to Wednesday. Wednesday we had a pretty nice day because when I was coming into the New York session on Wednesday, I noted how price formed, or we had a potential high forming on Tuesday, and price had yet to trade down into the daily fair value gap here. So I didn't know whether we were going to be bullish or bearish on the week, but I said regardless of what bias we have, price should still want to dip down into this fair value gap and then either trade lower or we dip down here and trade higher. So my bias coming into Wednesday was bearish, and I was looking for price to come back into that daily fair value gap. And I saw that London session posted the high of the day, or the potential high of the day, and we started trading down. Now we had equal highs here in London, which I was looking at, but at 8:30 we had high impact news, and I was seeing if the high impact news at 8:30 was going to form a bullish setup to take out these equal highs. But we didn't have any bullish displacement up. In fact, we had displacement down. So we took this short-term buy-side liquidity and had displacement down, and we had this fair value gap in premium here. And that's where I went short, and I took profits at the 1.3R TP. Now I know that this wasn't significant liquidity in terms of like a session high or a previous day high, but I was pretty convinced in my bias that price was going to want to trade lower, given all of those factors that I noted, which is why I felt comfortable entering on this YouTube model here, even though we only took very short-term buy-side liquidity. And I noted that we also rated Asia low, but we never got any displacement breaking market structure to the upside. And then I also noted this institutional order flow entry drill, which I didn't end up taking an entry on. I was just watching it live, kind of noting it with this long or short like tool here. Came back up into premium and went down. And because my bias was bearish, I was targeting previous day's low on Wednesday. So the second trade I ended up taking was off of the lunch session that formed a failure swing with US 30. US 30 took this 9:30 a.m. high where we had a failure swing here, broke down, had clear displacement down, and I entered in on this fair value gap here in premium and just targeted again the 1.3R, but this right here was the previous day's low, and that was my draw on liquidity. So I was anticipating price to come down here and take it, but we did not do that. Instead, we really just ended up consolidating. And I noted this other kind of institutional order flow entry drill here. This was really sloppy though. I didn't take this at all because I felt that price should have taken previous day's low already on this setup here. But I just marked this fair value gap out, and if I were to just target 1.3R, I would have hit TP. But I mean, clearly this didn't really go anywhere. It's just consolidation here, and then we went up and consolidated again. So Wednesday I felt was a pretty clean day that gave 3 opportunities here, these 3. So deleted the equal highs marker. So coming into Thursday, in the New York session, I noted how price took previous day's low already, and London session really just expanded downward, and we had dipped into the weekly order block, bullish order block, as well as the fair value gap on the daily chart. So that, coupled with the fact that London had traded down pretty extensively, and we were very far away from the 12 a.m. opening price, so that means we were in a very deep discount relative to the daily range. I was pretty skeptical in taking shorts because I felt that we could be bullish or have bullish displacement at any moment down here. So I was just watching price, and we had a short-term setup here on the M3, bearish setup, where we had a failure swing with this short-term liquidity, but I didn't take it just for that reason, and that was good because price would have knocked me out anyway. And this setup here, this short-term, where we had a failure swing with the short-term liquidity, was different than the one on Wednesday, because on Wednesday we didn't trade into this high time frame PD array, right? The weekly order block and daily fair value gap. So that's why down here I'm not really keen on looking for shorts, because I feel that price could have bullish displacement at any time. And here we ended up having some displacement on the M5. I just noted it. It wasn't anything super significant. We ended up violating the M5 fair value gap below anyway. But still, right here, this wasn't clear to me what price wanted to do. It wasn't until this candle right here at 11:55 that broke up clear, no question displacement, that I said we are in a market maker buy model with this or this whole area really being the original consolidation, and we had these equal highs right above price. So at this point I was looking for longs with those equal highs being the drawn liquidity right there. So at first I was looking for a setup in the PM session where we would raid the London low, but that didn't end up happening. We just dipped down into this M15 fair value gap a little bit. We never made it into discount of the dealing range, and then started trading higher. Now, we formed a new dealing range here on M15. And I ended up placing limits for a long here, which I would have gotten stopped out, but the paper trading didn't execute this for whatever reason. Now, if I had used the M15 fair value gap low as my stop loss and targeted 1.3R, it would have hit take profit. But on the M5, there was a small M5 fair value gap below this one here, below the bottom of that M15 fair value gap below, which is why I extended my stop loss below that M5 fair value gap below. So if my trade would have been executed, it would have just swerved TP and then stopped me out. And what price ended up doing is just retracing into the larger dealing range. So we had OTE here from that low to that high. And this was the M15 fair value gap that I was originally wanting to enter on. And then we had this M15 mitigation block here. I didn't end up taking this entry because at the time I didn't know if this wanted to be like a OTE short, but when I went back and I reviewed price action, given the fact that we're in these high time frame P arrays, the weekly order block, and daily fair value gap, we have clear bullish displacement, probably a market maker buy model, equal highs up here. The confluences for bullishness are much more than the confluences for bearishness. So looking back, I think that this entry here would have made sense. Even if I had gotten stopped out at this M15 fair value gap, I could have saw that price was retracing into the larger dealing range and taken a 1.3R trade here. So this was a pretty clean setup for Thursday. Now, Friday, turned out we had a market maker sell model. So we went from a market maker buy model here to a market maker sell model here, with that being the original consolidation here. So initially, when I opened the charts on Monday, price was up here, and I was noting this institutional order flow entry drill to complete the market maker buy model from Thursday, as well as run the equal highs up here. And this was like literally right when I opened the charts. But then I also noted this bearish SMT, and that's what kind of avoided me entering this trade. Looking back, it would have made sense to enter in on it, but again, this was literally right when I opened the charts, and I hadn't done any analysis. My eyes were drawn to this fair value gap and the equal highs that I had marked out from yesterday. So that was okay that I missed that trade. But after we completed the market maker buy model here and took the equal highs, basically I was just waiting for evidence of what price wanted to do, if we wanted to expand higher, because so this was the original consolidation for the market maker buy model. We also had these equal highs up here. So I was just waiting to see what price wanted to do after taking this liquidity here. and the answer came at the 9:30 open here, where we had clear displacement to the downside, and we had a low time frame SMT here. This was NASDAQ and US 30 SMT, right? So I also just noted the equal highs here, but after this displacement down, low time frame SMT, we took previous day's high, completed the market maker buy model, and also had equal highs that we took. All of that evidence combined broke market structure. I said that this is definitely bearish, and we could potentially retrace maybe into OTE here. So I ended up setting a limit here. That obviously got swerved because we never came back up into premium of the dealing range. So I ended up taking an institutional order flow entry drill entry here for 1.3R. Now, initially I was a bit nervous taking this trade because I was watching the SMT with London low that we had with NASDAQ. Basically, I was seeing if NASDAQ was going to take a London low, and once I got in the trade here, we still didn't have an SMT. So that's kind of what made me a little bit more comfortable getting into this institutional order flow entry drill, because we didn't have a bullish SMT with NASDAQ yet. Once we took, once we hit the 1.3 RTP here, and we took this sell side, we did end up having a NASDAQ SMT. So NAS took London low. We had a failure swing with US 500. And then I noted this other fair value gap that formed here. And I said that I didn't take a trade on this one because we had that bullish SMT. And I said that this is going to this fair value gap is probably going to be violated. And that's what ended up happening here. So then we had lunch. I stepped away from the charts here, and we came down and completed the market maker sell model, and we took London low. On the futures chart, it's much clearer that we took the low here. So at this point, I was kind of pretty much done for the week. So I wasn't paying as much attention to the charts. And I pretty much, because I was at work, and then here I stepped away from the computer to go eat something. And once I came back, I literally came back on this candle right here. And I noticed how price had been respecting bullish PD arrays here. This order block, fair value gap here, broke market structure, shifted market structure, and then we had this institutional order flow entry drill. And I saw this immediately here, and I said, "Oh fuck, I just missed an entry." And sure enough, that's exactly what happened. And we came up here, back into that original M5, M15 fair value gap that in the AM session I was trying to short. So this, if I had been at the charts, I would have unquestionably taken this long setup here, because there was just so much evidence with the raid respecting these PD arrays, breaking market structure, and your drawing liquidity would have been the fair value gap up here. So very clean day to end off the week on Friday. So well, let me delete these. Going into next week, we pretty much just kind of as a summary, we just consolidated all of this week. So on the weekly chart, there's nothing super clear because we're inside a bearish weekly order block and we just came off of this bullish weekly order block. Daily chart, of course, as I said, we're respecting these bullish PD arrays here. So to be honest, again, I don't really have a clear bias coming into this week. I just noted previous week's high, previous week's low, and this set of equal highs here and this set of equal lows here. I don't know if price wants to dip down into, I just noted this equilibrium here of the daily dealing range. I don't know if we want to come down into discount of that daily dealing range and then continue up. The only thing I saw, or another thing that I saw, is that US 30 already hit its daily order block and closed in its daily fair value gap. So perhaps US 500 doesn't need to come down here and we can just continue going up. But I think that we're going to need to wait for more evidence to see what price wants to do. So that's why I just marked the liquidity. And the news this week is pretty short because Thursday and Friday are bank holidays. Thursday is Thanksgiving, and then Friday, typically most businesses have off the day after Thanksgiving. So basically these 2 days are a holiday, and that means we only have Monday through Wednesday in terms of days to trade. And Monday has no high impact news or medium impact news, so it's just really Tuesday and Wednesday. So to be honest, I'm going to expect price to continue consolidating, but I don't think that's necessarily an issue because we had a lot of good setups this past week and price was just consolidating. So yeah, just marked up the liquidity, and I'm going to see if we form any types of setups around these significant liquidity areas. So we'll see what happens next week.